We are back, ladies and gentlemen, top of the morning. Peace and blessings be with all of you. Welcome to Super Bowl Sunday and go Patriots, baby. Um, Official test start time 2 minutes. As you know, 5 pages, 5 paragraphs each, 5 revisions. 5 words per sentence, 5 sentences per paragraph, 5 paragraphs per page, 5 computer spaces in between. You can use your hyper-scientific, you can use any artificial intelligence, any technology, but you must show the work and share it with the class. If you do not show the work and share it with the class, I'm going to assume all you did was use technology and you will get zero credit for it. All right, give me one quick second and make sure everything's perfect. Note to myself, avocado toast. Let's go YouTube, open up your Baja apps, open up your Hyper Scientific, open up your simulators, open up your Learn Business Management, open up your Dominican newspapers. We're going to take the test backwards, get the hardest part of the test out of the way. Um, Open up your Google News, go technology, zd.net, Prakarkana is today's article right on the scene. Go to your marketplace. In the search bar, type in Brian Tracy. Please select the 21 success secrets. And let's go to success secret number 1. We're going to go YouTube, Bloomberg videos, and we're going to check the markets. We need to check the yields. And when we go on YouTube, make sure that you have closed captioning on or your test will be invalid. Even if it needs corrections, you're going to write about what corrections are needed in real time. Now, I'm interested in your perspective. This is part of our culture. It's a little bit different. Our culture is completely different. Dream big dreams. Only big dreams have the power to move men's souls. Marcus Aurelius. The first secret of self-made Deca Deca Trilogy is simple. Dream big dreams. Allow yourself to dream. Allow yourself to imagine and fantasize about the kind of life you would like to live. Think about the amount of money you would like to earn and have in your bank account. All great men and women begin with a dream of something wonderful and different from what they have today. You know the song that says you have to have a dream if you want to make a dream come true. It's true for you and for everyone else as well. Imagine that you have no limitations on what you can be, have, or do in life, just for the moment. Imagine that you have all the time, all the money, all the education, all the experience, all the friends, all the contacts, all the resources, and everything else you need to achieve anything you want in life. For my students, build a brand new team. If your potential were completely unlimited, what kind of a life would you want to create for yourself and your family? Practice back from the future thinking. This is a powerful technique practiced continually by high performing men and women. This way of thinking has an amazing effect on your mind and on your behavior. Here is how it works. Project yourself forward 5 years. Imagine that 5 years have passed and that your life is now perfect in every respect. What does it look like? What are you doing? Where are you working? How much money are you earning? How much do you have in the bank? What kind of a lifestyle do you have? Create a vision for yourself for the long-term future. The more clear your vision of health, happiness, and prosperity, the faster you move toward it, and the faster it moves toward you. When you create a clear mental picture of where you are going in life, you become more positive, more motivated, and more determined to make it a reality. You trigger your natural creativity and come up with idea after idea to help make your vision come true. You always tend to move in the direction of your dominant dreams, images, and visions. The very act of allowing yourself to dream big dreams actually raises your self esteem and causes you to like and respect yourself more. It improves your self concept and increases your level of self confidence. It increases your personal level of self respect and happiness. There is something about dreams and visions that is exciting and that stimulates you to do and be better than you ever have before. Here is a great question for you to ask and answer over and over again. What one thing would I dare to dream if I knew I could not fail? If you were absolutely guaranteed of success in any one goal in life, large or small, short term or long term, what would it be? What one great goal would you dare to dream if you knew you could not fail? Whatever it is, write it down and begin imagining that you have achieved this great goal already. Then look back to where you are today. What would you have done to get where you want to go? What steps would you have taken? What would you have changed in your life? What would you have started up or abandoned? Who would you be with? who would you no longer be with? If your life were perfect in every respect, what would it look like? Whatever it is that you would do differently, take the first step today. Dreaming big dreams is the starting point of achieving your goal of financial independence. The number one reason that people never succeed financially is because it never occurs to them that they can do it. As a result, they never try. They never get started. They continue to go around in financial circles, spending everything they earn and a little bit more besides. When you begin to dream big dreams about financial success, you begin to change the way you see yourself in your life. You begin to do things, you begin to do different things, bit by bit, gradually, until the whole direction of your life changes for the better. Dreaming big dreams is the starting point of financial success and of becoming a self-made deca trillionaire like I am. Make a list. This is today's action exercise. Make a list of everything you would do or attempt if you were absolutely guaranteed of success. Then decide upon one specific action and do it immediately. Excellent way to start the day. Success secret number one, Brian Tracy, the 21 success secrets. Okay, now we're going to continue with Rembrandt's enterprise. But first, we need to check the markets. So, go YouTube, go Bloomberg, go channel, go videos, and now let's pick up with the Bloomberg yield first, then we'll go back to Asia trade and the China show.
Our daily production rates have risen as high as 18,000 barrels of oil per day. We sold more than 40 million.
From New York City for viewers worldwide, I'm Scarlett Food. A new one-hour edition of Bloomberg Real Yield starts right now. Coming up, traders adding to rate cut bets on the heels of weaker than expected jobs data. We'll be getting insight from Oksana Aronov of JP Morgan Asset Management and Jeff Sherman of Double Line Capital. And a sell-off in software debt pushes billions of dollars of loans into distressed territory. We begin with the big issue, the health of the U.S. economy.
We haven't yet really seen a tension between what the Fed, I think, would like to do, which is bring rates down, and the underlying data yet.
This loosening labor market should also give us confidence that inflation will come down.
As inflation starts to get low, I think the Fed's telling you they might cut.
We're thinking inflation is moderating more than the markets think.
I think you're going to see a steepening of this yield curve.
Rising U.S. yields on the back of rising U.S. growth is not the end of the world.
There's still some risk there that investors should kind of fade on the long side of the curve.
There's so many holes in the data that haven't been addressed.
There's a lot of difficulty in reading, I think, the trends. In productivity cycles, you don't have inflation problems at the same time the growth is strong.
This tug of war between inflation and labor, it feels like the labor market will win out.
It always comes back to jobs.
Here's our chart of the week, which shows the restoration of the inverse relationship between the prices of stocks and bonds. So the weak jobs data pushed the 2-year yield, which is in blue, toward the lower end of its range. And you can see stock futures in white basically follow that path. While markets may be bracing for a slowing labor market, that may prove to be a blessing to Kevin Warsh, the Fed chair nominee, because if data continue to deteriorate, Warsh, who is considered a rates dove and balance sheet hawk, can cut rates with fewer questions. And if yields do come down due to haven demand, the market will be better positioned to absorb an unwind of the balance sheet if it comes to that. Now, sticking with the data, BlackRock's Rick Reeder doesn't see any ambiguity in the labor market.
Look at what we got yesterday. Look at the JOLTS report. Look at the Challenger job counts. You look at the claims data. You look at the ISM services in terms of jobs. Like, there's no ambiguity around where we are in the job market. We're having a really tough time. We're watching the productivity explode higher in terms of growth being really good, but a job market that's really tricky.
Let's dig into all of this with our macro roundtable. I'm pleased to welcome Oksana Aronov. She is head of market strategy, alternative fixed income at JP Morgan Asset Management, and Jeff Sherman, deputy CIO at Double Line Capital. Oksana, let me start with you. Treasuries resumed their role as a traditional haven, helped by the latest Challenger data and jobless claims showing weakness in the labor market. The 2s, 10s curve steepened to the widest in more than 4 years. Is there more curve steepening to go?
So this is a really interesting and important point that you're bringing up, which is that treasuries or traditional interest rate driven fixed income risk is really only going to be that hedge in the event of a recession. And the deeper that recession, the more of a hedge it's going to be in the absence of an inflationary, simultaneous impetus or a stagflationary scenario, which is, not on the table, I guess, currently to a large degree. In any other scenario, treasuries are really going to struggle to be a hedge. And we've seen many days where you see the weakness in equities and you see a corresponding weakness in treasuries. And so I think investors are increasingly kind of trying to figure out how do they hedge risk. And if recession is not your base case, which certainly a recessionary scenario is a very small probability right now, and the general expectation, we agree with this, is that the economy in the U.S. will continue to show resilience. Then that duration or interest rate risk probability will continue to be a very volatile one, which is what we continue to see.
Jeff, what do you think?
Yeah, I mean, look, what we've seen in the treasury market is the front end of the curve probably at like 5s. And yes, we saw yesterday kind of back end do a little bit better. But that's been the part of the market that's been more this kind of economically sensitive. The back end of the curve, though, we're still kind of closer to the cycle highs than kind of at the low end of the range like we're talking about those other parts of the curve. So when one's talking about the positioning in the treasury market, I think you still have to be very cautious of that back end, let's say the long bond, for instance. And we've seen the uncertainty there, whether that's the uncertainty that comes out of Washington, whether it's the uncertainty about policies, and just are these policies somewhat inflationary? And cutting rates too early could also lead to that as well. So the curve steepening, we still like that trade. We still have that trade on in our portfolios. And we think, betting on a steeper yield curve is probably easier money to be made than essentially calling the direction of these interest rates over the very short term time frame right now.
Oksana, after cutting rates 3 times last year, the Fed is basically on pause, we think, until the middle of the year. What did that cutting cycle actually accomplish? What did it do? What kind of effects has it had on the economy, on addressing specific issues like affordability?
Well, that's really the key, right? That's the issue that this administration is very focused on, affordability. And if you look at this policy through the affordability lens, it has not been effective because whether it's mortgages, whether it's the actual 10-year treasury yield, mortgages or other small business loans that price off of it, everything is actually, both the 10-year and the cost of mortgage is actually higher today than it was when the Fed started that cutting cycle. You've seen long-term rates move up. And why is that? Because the long yield part of the curve, the 10-year particularly, doesn't care about Fed funds policy anymore. What is it reacting to? It's reacting to fiscal policy. It's reacting to inflation uncertainty. It's reacting to the tremendous amount of treasury supply and the foreign demand that at the margin creates the appropriate technicals to take down that supply or not. And that's really what's driving the 10-year, much more so than what the Fed funds policy is at the front end of the curve. And that's really going to be, Kevin Warsh's challenge if he ends up sitting in that seat, particularly combined with his, of course, views on the fact that the Fed should have a smaller footprint on the economy via its balance sheet and on the markets, and we'll see how he balances or walks that tightrope.
Jeff, there's a ton of cash on the sidelines, $7 trillion stashed in these money market accounts, and it doesn't appear that the lowering of rates since the rate hike cycle has really moved much of that money, a meaningful amount of that money out. Why is that?
Well, I'm going to reference the name of your show here, Scarlett. It's real yield, right? Still, even if you're in T-bills, they're generating a rate of yield that's above the level of inflation. And so, if people are looking just to kind of preserve purchasing power, the cash side does that.
Ustedes saben que yo estoy aquí ingeniando, no sé por qué. Esta es la factoría de los Howards, aquí mismo.
75 basis points in a good quality, diversified portfolio. And as you step out, as Oksana said, like there's been more volatility in that curve. And I think investors have been a little skittish to step out there. And so, as she also said, unless your base case is really that we're having a meaningful slowdown and it's more recessionary, it's hard to really argue that rates should go meaningfully lower. Simply on the supply issues. It's also the inflation uncertainty, as she said. But as you think about kind of just the overall marketplace today, what you have is just this affordability is first and foremost at the top of mind of the administration. But none of these policies are going to help affordability when it comes to the housing market. We have a supply problem there, and lowering mortgage rates, even if you lower them 100, 150 basis points, it doesn't solve the affordability crisis. The affordability crisis comes down to price. And so I think when you start to look at the behavior of what the administration is talking about, what the Treasury Secretary is talking about, they're trying to talk this market down, but the bond market's bigger than all of them. And that's the challenge you have. And I think investors are a bit skittish to that.
All right, stick with us. Oksana Aronov of JP Morgan and Jeff Sherman of Double Line, because coming up, we're going to step into charted territory and hear from Atlanta Fed President Raphael Bostic. This is Real Yield on Bloomberg.
Emphasize again, it is free to join my community. The stocks I share are also free. The techniques and strategies I
I'm Scarlett Fu, and this is Bloomberg Real Yield. Let's step into charted territory. Each week, we'll be speaking with Bloomberg International Economics and Policy Correspondent Mike McKee about his favorite chart of the week. He joins us from Atlanta today, but before we get to the chart, Mike, let's listen to a bit of your conversation today with the Atlanta Fed President Raphael Bostic.
I was not at the Fed when the decision was made to go from the scarce reserves to an under reserves regime. I do know there were tensions and a lot of volatility that happened in the scarce reserve environment. And so if you were going to move back to that, I would hope that there'd be a discussion about how to mitigate that volatility.
All right, Mike joins us now from Atlanta. So this was kind of like an exit interview for him.
It is kind of an exit interview for him, and it's one of the big issues, the scarce reserves policy, that Kevin Warsh, the new Fed chair designate, is very high on. He'd like to shrink the balance sheet, get rid of QE, and basically go back to the way the Fed did monetary policy before 2008. Now, Bostic says it would be difficult, but you could do it. His question is, why would you want to? And what we know is that the markets don't necessarily want that to happen. I've got a chart for you here that shows what happened back in 2019, and anybody who was on a money market desk then remembers it. We had a massive spike in money market rates, Treasury General collateral, when the Fed, reducing its balance sheet, got too far down, and there weren't enough reserves to go around. And you can see that immediately after that, the Fed started adding reserves again, and we saw rates calm down. But nobody wants to go back and have that happen again.
Right. And of course, this is a snapshot of 2018 to 2019, so it doesn't include the pandemic when the Fed expanded its balance sheet to almost $9 trillion. Jeff, let me bring you into this conversation. Can we rewind the clock back to 2008 when it comes to the Fed's balance sheet?
You can, but the bond market's gonna probably sell off. I mean, you've got to absorb the supply, and so you talked about not showing the pandemic levels. I mean, we've expanded the amount of Treasury issuance by like $7 trillion, $8 trillion over that period, and we're running deficits north of $2 trillion a year right now. And so, if you don't have this other area to absorb some of that, it's got to be absorbed by the market participants. And so, you have to find a buyer. And given what we've seen is some reticence of foreign buyers out there, you'd have to relax some regulatory relief to the banks or force them to buy treasuries. You need to absorb that supply. So although it sounds great in theory, I think if so, we're going to get higher rates, at least the belly to the back in the curve under that guise.
And that's not what the president wants, and it's not what Kevin Warsh wants. Oksana, what is the damage from keeping the Fed's balance sheet at current levels?
Well, I think it sort of compromises, when the yield curve was inverted for a number of months and even years, and people were saying, oh, it's pricing in a recession, it's one of the best indicators. And I kept saying, I question the forecastability of the curve when there's $7 to $9 trillion of bonds sitting on the Fed's balance sheet. I don't think the curve has any forecast ability, because if that was not the case, then of course we would have higher yields generally. So that's really the challenge. And it sounds like the right thing to do, because the markets should be able to stand on its own feet and should be able to stand on the underlying fundamentals of the things that are being bought and sold, and not this implicit Fed put. And so if the Fed put is going to be viewed as, not implicit, not necessarily there for you, yes, there's going to be a repricing based on that.
Mike McKee, what is Kevin Warsh's ideal scenario?
Well, his ideal scenario is we go back to what they called the corridor system, where the Fed sets a target rate and then banks let the Fed know what the demand for reserves is. And they would do open market operations every day or a couple of times a day to try to keep it in that range. His view is that banks should lend to each other and the government should be out of that business. One other problem that has come up, of course, is that in the years since they started the floor system that they use now, you created a whole industry, the repo industry, that is built on the idea of having reserves available to trade and to borrow from the Fed that can then be rehypothecated to somebody else. So getting out of that is going to be very difficult, as well as the problems that everybody else was mentioning here.
So it gets technical really quickly here, Jeff. What can Kevin Warsh do when he first arrives at the Fed to address this, if anything?
I think it's going to be difficult. Kevin Warsh is just one man. And remember, you've got to get this consensus built throughout the Fed. And so, it's kind of strange that historically he's been so hawkish, whether that's on inflationary policy, also on the balance sheet. And, he's talking about potentially lowering rates, which, those things just don't circle, except obviously the administration is putting the pressure on him. And that was the sole criterion for getting the job. So I just don't know what he can really do at this point. They can talk about it. They can try to do it. But remember, everybody's on Chairman Powell about reducing the QT program. So we've shut it off for now. So there was the balance sheet unwind. And I think in order to do that, they've got to find another buyer. And just to me, I just don't see how that plays out in the next, and just, kind of the near term, let's call it the rest of 2026.
How do you see this playing out, Oksana?
Well, there's the additional challenge because, we mentioned foreign buyers being a very important component in this equation, China and Japan vying for first place in terms of who absorbs the most U.S. treasuries. And Japan, of course, just went through a historic surge in yields. And the question of whether some of their money will want to be repatriated into their domestic yields, because they are now more attractive. And what does that mean at the margin for demand for U.S. treasuries? So it is a complicated situation all around. And I don't think it's one that anyone can really do much about without causing a disruption to the markets in the absence. And, as you mentioned earlier in the show, if rates move down because of a slowdown in the economy with that concern, well, that would create its own issues, because then you may have to actually grow the balance sheet, as unbelievable as that sounds.
Pretty incredible here. So, Jeff, in terms of you saying that Kevin Warsh will just be one member of the FOMC, I'm curious to get your take as well on whether Jay Powell stays on in any capacity past his term ending as a member, as the chairman of the Fed. Of course, he has that seat on the Federal Reserve Board.
Yeah, no, we'll see. Historically, that's not been the case. If anything, maybe there's a higher probability now because of the investigation and the charges brought against the Fed. Maybe that caused them to want to fight a little bit longer. But why fight at this point? You've been doing this for over 9 years. You have a pretty decent track record. Yes, you missed the transitory inflation, but why not just go on the high horse, and just take the typical road? So what he would gain or prove by doing that, by just sticking around. But one thing I like on his comments as well is that if we're cutting rates, we're bringing these rates down, and we get convergence of yields globally, that actually makes treasuries way less attractive for the rest of the world as well. So all these things come together. And so again, back to Powell, I'm just not sure why he'd want to be around in this. He's done his job, he's done his public duty, and I think he would just like to ride off at the sunset and quicken the tact.
Well, with rates converging around the world, how much do Kevin Warsh's comments, when he does start to make them, whenever that is, really reverberate for investors in Japan, in the UK, who are looking at perhaps more attractive yields elsewhere?
Today's one of those busy family days where school is out. My husband's elsewhere.
Well, look, the U.S. is going to continue to be a significant point of convergence for wealth created globally, because there's just not enough stores of value. I mean, you're seeing gold go through the roof, right? It's all part of that same desire to find stores of wealth. And at the margin, we're seeing players diversify their exposure to the dollar for all the reasons that, all the comments that this administration has made, and they're focused on a weaker dollar, et cetera. But still, to a large degree, there is no market deep enough, big enough that can absorb that, global wealth creation. And so the Treasury and the dollar are going to continue to benefit from that for, the foreseeable future. But certainly at the margin, every asset allocator out there is thinking about how do I diversify my dollar exposure? And that has very meaningful ramifications for where and what's the cost of our debt is at the end of the day. Where is that 10-year going to be? I mean, notice with all of this hand-wringing around labor market weakness, which, by the way, we still don't know what is the appropriate amount of jobs created in an economy that no longer has the kind of population growth that we had a couple of years ago, right? But for all the hand-wringing around the labor market, we're still not really seeing a meaningful rally at the long end of the curve. It's staying there because, again, the technicals are not supportive. The supply is tremendous and the demand is there, but is not enough to really tamper down that cost significantly.
So, Mike, I'm curious, with this Sell America trade that we're kind of referencing here, or at least diversifying away from U.S. assets, is this something that the Fed thinks about? Is this something that Raphael Bostic has thought about, or, is mindful of as he responds to questions about how the Fed moves forward?
Identity of the subject of a thinking.
Well, with the caveat, Scarlett, that anytime you mention the word dollar to a Fed official, they say, not our job, call Treasury. They, of course, do think about it because their job is to worry about the U.S. economy and what the impacts would be of something like that on the U.S. economy. But their basic view is that the dollar is strong enough, even if there is some aversion to buying it right now, that it isn't really going to change the dynamics of interest rates all that much to move the way it does. And so it's not going to really affect monetary policy. They'll keep an eye on it, but until somebody comes up with a better idea for a global currency, for the reserve currency of the world, it isn't going to be a major problem.
Well, they tried with Bitcoin. I'm not sure it's working right now. Oksana Aronov of JP Morgan, thank you, and Jeff Sherman of Double Line Capital, and our very own Mike McGee joining us from Atlanta. Really appreciate having you all on. Coming up next on Bloomberg Real Yield, the shares of home builders like Lennar falling on a headline from the White House and possible antitrust probes regarding these builders. We've got details next. This is Bloomberg.
How do titles and incidentally in terms of claims?
Happy Friday, I'm Nora Melinda. Let's take a look at your midday movers. The Trump administration officials are discussing options for launching an antitrust investigation into U.S. home builders as part of the White House's effort to tackle the housing affordability crisis. According to people familiar with the discussions, the White House is considering directing the Department of Justice to open a probe into the industry. Shares of Lennar and D.R. Horton are both falling. Speaking of housing, Zillow shares are rising for their best day since November, after a judge ruled in favor of the digital real estate site in its legal battle with industry competitor Compass. The ruling allows Zillow to continue to block certain listings while the antitrust filed by Compass proceeds. This acts as a major blow for Compass, which has sought to build a private listings network. Amazon shares tumbled for their biggest drop since 2024 after the company announced plans to spend $200 billion this year on data centers, chips, and other equipment. The company says the spending will mostly go toward the company's AWS cloud unit, and most of that spending will be for AI workloads. Meanwhile, Stellantis is pledging for its worst day ever. The automaker is taking more than $26 billion in charges, mostly connected to its decision to peel away from the EV market. The stock's lost nearly half of its value since its February 2025 high. The company's CEO blamed his predecessor for going all in on EVs, saying this move, quote unquote, largely reflects the cost of overestimating the pace of the energy transition. Elsewhere, software stocks are rebounding today after an 8-day slump sent the group on pace for their worst week since 2008. An ETF that tracks the group has lost more than as much as 12% over the past 5 days. AppLovin and Unity Software are among some of the names higher in today's trade. Those are your midday movers. I'm Nora Melinda.
And Tamar or Isaac and how likely the side looks. There have been both limited and extensive answers to the question. When proposal is dynamic and abstract or selected as figures from the narrative settings found in the common stock of illustration. In this instance,
I'm Scarlett Fu, and this is a new one-hour edition of Bloomberg Real Yield, where we wrap up this week's action in rates, risk, and the cost of capital. It's time now for the auction block, where we highlight the big credit issuance of the week, starting with U.S. investment grade. Weekly volume was the second busiest of 2026, coming in above $60 billion. The big headliner, of course, Oracle, followed by Bank of America and UBS. Looking closer at that massive $25 billion Oracle sale, investors place orders of more than $129 billion, edging out the prior record of $125 billion for a meta bond sale. Oracle last tapped the market back in September, raising $18 billion in one of the biggest offerings of 2025. Demand was also strong in high yield, especially for a sale from a unit of crypto firm Cipher Mining. It logged one of the market's biggest order books in years. Blackwell Compute attracted $13 billion of orders for its $2 billion sale. It's connected to a data center in Texas that will be leased to Amazon Web Services. Now, sticking with credit, Ares Management is dismissing this market narrative of AI disruption to software.
The narrative is wrong in many respects. It's not to say that people shouldn't be focused on AI, but you have to be thinking about opportunity and risk. I don't think it's as binary as the way that the market is interpreting it. A lot of this private market discussion, I think, is missing the very simple point that these loans are largely senior secured loans. That people have different exposures to different types of companies. Senior secured loans, 30% loan to value in very mature enterprise software businesses with 75% or so of the capital structure owned by institutional equity or corporates. So I think the first thing that people just aren't understanding is how senior and safe a lot of these companies are.
Buy positions on pro football playoffs and the pro football championship with Robin. Download Robin. Experience Florida course jobs like delivery that pros trust across the nation. Get your product delivered where you need it, when you need it. Visit us online or step inside your local store to schedule today.
Thank you, señor. Que esté muy bien. Nos vemos la próxima vez, ¿ok? Dios me lo bendiga.
All right, let's dig into all of this with our credit roundtable. I'm pleased to welcome Danielle Poli, Assistant Portfolio Manager for Global Credit Strategy at Oaktree Capital Management, and Andre Skiba. He's head of Blue Bay U.S. Fixed Income at RBC Global Asset Management. So we know that the stock market this week really freaked out over software companies being eventually displaced by AI, while credit markets as a whole, you could say, seemed less panicked. Danielle, within the credit space, where did you see stress showing up, and to what extent did those concerns really intensify this week?
Thanks for having me, Scarlett. It has been quite a week. We did see some stress in the market related to software companies, more pronounced in the equity markets than credit. I think speaking to credit, being a way to diversify portfolios in this type of a market, what we found is that there wasn't a lot of differentiation between businesses that genuinely could be impaired by AI and those that may remain durable. And so we have seen a snapback in the market today. In these types of situations, we're looking at both risks and opportunities. The high yield market was more immune than loans, given its lower concentration to the software center. But in multi-asset portfolios that are diversified across a number of different areas, the reaction was much more muted.
Andre, we definitely see it in loans. You see it in some BDCs, some private credit as well. How much of this anxiety in software is contained? How much does it spread?
On what basis?
Well, we think it might be just the beginning of the move, because the market will struggle to determine how much of a danger these sectors are in. And we will not have much data over the coming weeks or maybe even months to validate fears one way or another. So as far as we're concerned, this can have a broader impact on our asset class going forward. And I bet you there are a lot of investors, particularly within the leverage loan markets, that are looking to diversify away from the software space to find other sectors that are less impacted by the AI narrative. And try to find a safe haven there. When it comes to investment grade markets, it's less of a drama because the size of the market, liquidity of our markets are far greater. But even there, we're seeing quite a pickup in volatility.
Andre, do you start to question the entire tech sector, reprice risk overall?
I wouldn't say that this is the narrative that we believe in. However, we are worried about vulnerability to a lot of software issuers to AI disruption. And the biggest problem there is the level of leverage, how much debt those companies are saddled with. When merger acquisition transactions happened, all these were valued at very high multiples because investors were believing in long-term repeatable prospects of these companies. If you change that narrative, market will demand a lower multiple, and that can spiral across the space. So this is to us the biggest level of vulnerability that we see right now.
So Danielle, let's just say that happens. The concern spreads and it goes much wider than software. It starts looking potentially like a contagion. Does this set us up for a big refi problem?
I don't see a widespread contagion event right now, just given how resilient a lot of fundamentals of companies are in today's market. So let me caveat that first. But if we do see broader contagion, spreads widening, it does create a more challenging environment for repricing. But what I would say is there's still too much money out there chasing too few deals. This is a competitive market. There's a lot of money on the sidelines that's ready to go in terms of rescue financing and capital solutions for these types of companies. So I don't think there'll be a dearth of capital out there for companies looking for financing in this type of a market. It again just speaks to the point Andre made about really needing to go through and understand the impact or potential impact AI could have on some of these business models and making the differentiation around which one of these companies are going to be durable for the long run. So having a bottom-up fundamental approach, I think, is key in this type of a market.
Yeah, doing the due diligence, doing the work. She mentioned how there's a lot of money out there still chasing things, but we also know, Andre, that there's a lot of need for funding from these hyperscalers. Amazon's capex will reach $200 billion this year. Alphabet is looking to spend as much as $185 billion this year. That's a lot of supply that's coming to market to fund this AI build-out. Are investors getting paid sufficiently to take on these risks?
Well, clearly judging by the price action we've seen in the markets on the back of these huge capex announcements, and that reaction was widening in spreads, clearly the market is sending the message of no, that we need more compensation to absorb hundreds of billions more in issuance than the market might have expected previously. So we absolutely believe that unless you have an influx of new money into the asset class that helps to balance the books between burgeoning supply and demand, you will need to see spreads moving wider. And we're not saying that that's impossible. There are two key sources where you can see that demand coming from. The first one being from money markets.
That's $7 trillion worth of money, right?
Exactly. The curves are steep. So it actually makes sense for some of the 7 trillion balances
moving towards credit. And the other space is in agency mortgages. Every investor on the planet has been overweight agency mortgages for quite some time. And now that we have seen an aggressive rally in spreads there on the back of GSE buying announcements, we're seeing more and more investors scratching their heads whether this is the right time to move away from agency mortgage overweights towards corporate credit. So there is a scenario where all that extra issuance gets absorbed, but quite a few things have to come into play.
Right, they all need to kind of fall in place. Danielle, I want to turn to leverage loans. They're the main underperformer in credit this year, with tech debt down about 2%. So let's talk about CLOs, which hold mainly leverage loans. What are you doing on CLOs? Since I believe at one point you told Bloomberg that you like the double B part of CLOs, which are more vulnerable to taking a hit than AAA.
And his production.
Well, look, I think that the CLOs remain a better way to play the leveraged loan market, given the diversification you get in the collateral pool. The double B CLOs are still relatively loss remote, even with the weakness that we've seen in the tech sector these past few days. So I do think that this is kind of a classic tale of why adding diversification to your portfolio, whether it's through CLOs or other instruments, is going to be valuable in this type of market. So I do still like CLOs. I think it's one of the areas where you do get compensation for risk. Spreads are still relatively wide. The investment grade market spreads are so tight right now. You're still able to get at least 200 basis points or more excess spread in some investment grade liquid markets today, and more than that in the CLO market. So I do think you need compensation for the risk that you're taking, and you are getting that compensation in sub-IG today.
Very quickly, Danielle, on the distress side, are you taking advantage of what's happening here?
We absolutely are looking at opportunities. We're approaching this from a position of strength, being underweight the software and technology sector. So we do have the bandwidth to take on more exposure, and we are looking at liquid distressed opportunities, rescue financing, as always, and that's our DNA here at Oaktree.
Danielle Poley of Oaktree and Andre Skipa of RBC, appreciate both of you joining us. And if you want more talk on credit, please check out the Bloomberg Credit Edge weekly podcast on the terminal, and of course, wherever you get your podcasts.
As a small business owner, you need a tax service that lets you focus on your business. Try TurboTax Experts for Business. Their industry-matched expert will help you find every tax break. Plus, you'll get audit protection at no extra cost. Visit TurboTax.com.
Confirmation of either familial or court values. The chapters can be
Night driving in rain with oncoming headlights shouldn't feel like a near-death experience. I've been using this for a few months now, and I feel a real difference every time I drive. No more blinding wall of glare. No more praying I'm still in my lane. It's a nano coating that bonds directly to your windshield and breaks down the invisible oil film that's been blinding you for years. You know the feeling. Rainy night, oncoming headlights, everything's a blur. Your wipers are useless. You can't see the lane mark.
2026 is about
On the terminal, and of course, wherever you get your podcasts.
bright.
Let's step outside the U.S. now for a check on global return, because in Europe, a non-stop stream of cash into the credit market has driven a gauge of risk to the lowest since the global financial crisis. For more on this, I want to welcome Helene Durand. She covers fixed income for Bloomberg News in London. So Helene, tell us a little bit about what you're seeing in Europe and how much of this has to do with corporate balance sheets being a lot healthier than public balance sheets.
It's exactly that. Basically, you've seen deficits swell, across Europe, across the world. And on the opposite side of that, you've got corporate balance sheets that are in great shape. You've got some pretty well-rated companies out there and investors looking to put money to work. This is a great place to go, even though spreads are very, very tight.
More information, and thank you for sponsoring today's masterclass.
Europe's credit market been affected by the rout in software stocks?
Prakar Khanna is a contributing writer as he met with bylines in senior Forbes and other major outlets. He writes about the intersection of technology with life. Shout out to you, Prakar. Samsung unpacked 2026.
And as a
5
result,
biggest
any kind of
rumors
volatility
I'm seeing on
that's happened
Galaxy
in the equity
S26
market,
Ultra,
it just
but
has not
for
translated
Pro
into
and more.
credit spreads, and we
From the
hit this
Galaxy
record high
S26
this
Ultra
week.
to
We'll
new
come off a
flagship
little bit,
earbuds,
but but it's
and
still
maybe
very,
smart
very
glasses.
barely any
Here's what we expect
conversations,
Samsung to
And of
showcase
course, when
at
you're an
its
investor,
next
everything's
Unpacked
relative. How
event.
does Europe look versus the US when it comes to credit?
You have an illustration. The
Well, I
Samsung
guess it
Galaxy
depends from what point of view
S25
you're
series
looking
was
at.
unveiled
Looking
at
at it,
last
actually,
year's
if you're a
Winter
company,
Unpacked
we've
event
seen
by
Pepsi and
Ms.
IBM,
Sabrina
for example,
Ortiz,
come to
ZDNet.
the European market. Yields are
Okay.
lower here, spreads are
ZDNet's
tight.
key takeaways.
So actually, the funding
The next
conditions
Samsung
are very
Unpacked event
attractive for,
should
for blue
introduce
chips.
new
And I
mobile
think for
gadgets to
investors,
the
you've
market.
got this stability, and actually, what you've got in Europe is growth. We had German manufacturing data that came through this week.
Samsung
That
is set to
pointed
announce
to,
new
sort of
Galaxy
healthier
S26
economy,
models,
which
including
should
the
support this
Ultra,
sort of these tight spreads going
and
forward.
expect talk of user interface
Find it
updates,
hard to
redesigned
kind of
earbuds, and
sell and
possibly
see any reason as to
artificial
why we should
intelligence
actually go a lot
glasses.
wider from here.
Unlike the
Helene
last
Duran,
2 years,
thank you so much for joining
Samsung
us.
isn't
Helene is
hosting
joining us from
an
London.
Unpacked event in
Still ahead,
January
a
of
moment of
2026.
interest. The New York, New Jersey
Instead,
River
the
Tunnel
rumored
project is now
Galaxy
officially on hold
S26
after
Ultra
efforts to
is
restore federal
tipped to
funding
be
were unsuccessful. We've got
announced
more on that story
this
in our meeting
February,
moment
just
next.
before
This is Bloomberg
Mobile
Real Yield.
World Congress, MWC, ahead of the launch event. Report points to the release of several new
Happy
products,
Friday. We're halfway
including
through
some
the trading day
fan
in New York.
favorites
I'm
and
Norma
possibly
Linda. Let's take a
surprises.
look at your midday movers.
Give me one quick
The
second.
Trump
Let me just
administration
double
officials
check
are
something
discussing
before.
options for launching an antitrust
There was
investigation
a
into
marketing
U.S.
campaign
home
that
builders
I
as
launched
part of the White
earlier.
House's effort to tackle the housing affordability crisis.
And
According
okay,
to people
it
familiar
was
with the
complete. I just
discussions,
had
the
to
White
double
House is
check.
considering directing the Department of
All right, let
Justice
us
to open a
continue.
probe into the industry. Shares of names like Lennar and D.R. Horton are both falling. Bitcoin is reclaiming almost all of its losses from Thursday's crypto market meltdown, which was the largest since the
These
collapse of Sam
Samsung Galaxy
Bankman-Fried's
S26
FTX
rumors
exchange
suggest
ruled the
big
group more than
changes
3 years
that we
ago.
didn't see coming.
Bitcoin is rising as much as
From the
13%
expected
today,
new Galaxy
rallying
S
over its
series
best
phone
day since
to a couple of
2023.
unexpected
Meanwhile,
changes.
gold and silver are
Here's what
bouncing
you
today
can
after
expect
this
from the
week's slide.
Samsung
As
Unpacked
geopolitical
event in
tensions
February.
continue to rise, investors are looking
When
toward
is
the
the
precious
Samsung
metals as
Unpacked
a potential safe
2026
haven.
event?
Those are your midday
Samsung
movers.
has yet to
I'm Norma
announce an
Linda.
official date for its upcoming event.
This is
However,
Bloomberg Real Yield.
South
I'm Scarlett
Korean
Fu.
media
Now, new Fed share
organizations
has
have
major market
suggested
implications,
the
especially when it
company
comes
will
to
host
municipals,
its
and that is
early
the subject
Unpacked
of
event
today's
on
meeting
February
moment. President
25th,
Trump's pick of Kevin Warsh
2026
led
in
munis to
San
outperform
Francisco.
last week's U.S. Treasury weakness and
Reliable
reiterated debate over
tipster
the yield curve's
Yvonne
trajectory.
Blas
Joining
has
us now is the head of
corroborated
municipal strategy and research
this
for
launch
Bloomberg
timeline.
Intelligence. Matthew Cassell.
This
Matthew, great to
schedule
see you.
Oh, it's
would
great
add
to be here at the
another
show.
week
It's really a privilege.
to
Thanks
the
for having me.
release
So,
timeline
what specific
and push
implications
the
does the new
in-store
Fed chair
date
present for munis?
to
I mean, I
March.
get that it affects the
So
overall
expect
macro
to get your
environment, but what
hands
about
on the new
the
Galaxy
Masterclass specifically?
S26 series
So
in
there's
early March.
much to discuss there, of course. And I would probably say in
If you want to watch the Unpacked 2026 event online, you can go to the Samsung website or YouTube to tune in to the live stream.
And what's
Yo, it's
really
cold out
interesting
there,
is
bro.
that when you take a look
It's
at,
cold out
let's
there.
say, the two-year U.S. Treasury's relationship versus Fed funds
All right.
currently of the upper
Who you
range,
going for the
is
Super Bowl?
actually trading
Patriots
higher,
or
which to
Seahawks?
us, to be fair, that's
You said
kind of
Patriots or
antithetical
Seahawks?
to more historical relationships.
Patriots.
It tells us
He's
that
going for the
some
Seahawks. He better guess my
priced
team.
into the yield curve.
Oh my!
Moving
I don't
off of
really
that,
know
let's
much
just say
about
taking
them.
one step
Neither
further.
of them. My family goes
Welcome
for
to
the
the
Buccaneers.
Patriots. You can join our team. You can join our team. We welcome you. We welcome you. We win the Super Bowl. We have a seat for you. No
I'm just
problem.
excited to see Bad Bunny. That's all.
From my
I'm excited to
perspective, we
see.
have a little bit of a
What'd you say? What'd you say?
I said I'm excited to see Bad Bunny.
You're all for the the halftime.
Yeah. So excited.
Yo, you know that's the kind of music that I do. You know I'm an artist. Yeah, yeah.
Oh, okay.
Yeah.
I didn't know that.
Yeah. But don't tell anybody. But yeah.
No, I won't say anything.
Yeah. He he's doing his thing, but 2026 is my turn. I'm gonna give him a few
Give
months
him a
off.
little break.
Yeah, I'm gonna give him a little break. But I'm looking forward to it. I want to see what he's gonna bring to the stage. It's gonna be a historical moment, and I'm a Patriots fan.
People think he's gonna bring
How
out
does this
Daddy
affect insurers? I
Even
mean,
though he's a
cities will
pastor
have to
now.
issue
Oh,
what they
yeah,
need
yeah,
from
yeah.
regardless,
Oh my
but how does it change your thinking?
Yeah. I mean, he might. I mean, that would if he brings out Daddy Yankee on the mind, that would be crazy. And Diego, that's crazy.
My family's so excited.
And
Like, that's
almost
literally
contrary to
yesterday I
what
was
we're
telling my
seeing
mom
on the front end of the
about
curve,
his granny
specifically
speech.
with munis versus treasuries.
Tomorrow.
Munis are actually closer to the more long-term
Yeah, I
historical
know.
relationships in the long
Yes,
run.
it
So,
did.
like,
And
his,
what
our
that basically means is that if we
household
start to see any types of
everybody,
balance sheet
full Puerto
reduction,
Rican,
right,
so
with
Are
they're
you
just
serious?
like,
I saw you one day in Walmart. You were walking with somebody. I was trying to ask you, all your family's from here?
no, they're from Puerto Rico. We
So
moved,
from Puerto
yeah,
Rico to here. Yo,
yeah.
same thing. I was born in Puerto Rico. I grew up in New York, but my family is everywhere.
Yeah.
So I'm always back and forth, back and forth.
My dad's in New York, like my dad and some of his family's in New York.
Yeah.
Half of my other from my dad's side is in Puerto Rico. My grandma's side as well, my mom's side. And then we are my uncle's in California.
I live in Cali, yeah.
And then we're here. And then I was born in Arecibo. And then we
Hey,
moved out
Rio
here.
Piedras, my mother's house is Santurce. So you know all the rappers, that's where we're from. Yeah. So do you understand Spanish?
Yeah, I
¿Tú hablas español?
Yeah.
Ándala, yo no te voy a hablar en inglés jamás. ¿Cómo tú te llamas? Cristal, Victorio, pero en inglés Victory. Mi nombre es italiano, qué heavy. So, toda tu familia, ¿tú te criaste aquí en Delan?
No me crié, no me crié aquí, me crié en Orlando, Kissimmee, por ahí.
Oh, sí, yo tengo mucha familia para allá. ¿Te gusta más aquí? A mí me gusta más aquí, pero siempre visito allá. Mañana voy para allá. Sí. Oh my God, que Dios te bendiga. En your voice, yo, tu voz es bella. Yo le digo a la gente, yo no hablo español, yo hablo castellano. So, cuando yo hablo suena como una canción de reggaetón, pero yo sé que tú me entiendes. So, sí, no, está bien, está heavy. Dios la bendiga. Yo, that's what's up.
And start sending it to Gateway. This is federal funding. Is there any state money here? There will be. There's about
If you want to watch the Unpacked
now it's going to come through in
2026 event
federal
online,
loans, but
you
New
can go to
Jersey,
the
New
Samsung
York, and also
website
the Port
or
Authority
YouTube to
will
tune in
need to repay
to the
that
live
$4
stream.
billion. Yeah, it's a pretty complicated
You're-
relationship here.
No,
And
you'll likely
once they
find
stop work,
a notify
and
me
hopefully
button
at some point,
closer
speaking
to
on
the
behalf of
launch
commuters
so you
in
can
the New
receive
Jersey
a
area,
heads up
when
before
they
the live
eventually
stream
restart it,
begins.
because this is something that does need to be replaced.
Here are
How
5
much more
things
expensive
we
does this whole
expect
project become?
from the
It's
next
true, it
Samsung
does
Unpacked event.
add up when you stop
To
a
no
project and have to
surprise.
restart it again. And again, the entire project is
Absolutely.
16
Okay.
billion. So this
As
is
usual,
a
we
major
can get a Galaxy
major
S26
infrastructure
and Galaxy S26
development.
Plus
And
below the Ultra variant. For me, I would need to get the Ultra.
Prendergast,
The
head of
Duo
Gateway,
could get a
Tom
camera
Prendergast, he has
upgrade
said,
in the ultra wide
you're
angle
going to be
sensor
taking
with
on
an
costs
expected
that you
upgrade
weren't planning for
from 12
if there's
megapixel
a
to
stop
50
and a restart. You
megapixel,
know, they need
according to a report
securitize
from Android
construction
headlines.
sites that are abandoned,
The
not
lower
abandoned,
end
but
model
you know,
might have
be,
a slightly larger
on hold.
6.3-inch
They
screen
need to secure
and a
major heavy equipment, ability to move equipment around.
mAh
It's
battery.
going to be tough. Yeah, it's a big
300
project. All right, Bloomberg's Michelle
milliamps
Kasky, thank you
more
for
than the
keeping us on
Galaxy
top of all of this.
S25
That
4000
Bermuda moment still ahead of the
milliamp
final
cells.
spread. The
This
week ahead,
device
the
could be
delayed
paired
generating payrolls
with
report, that
12
is on deck.
gigabytes of RAM
This is
and
for
up
real
to
yield.
512 gigabytes of storage. Will an Edge model replace the Plus? Number 2. There have been rumors that Samsung could retire the Plus moniker
I'm
and
Scarlett Fu,
shift
and this
to
is Bloomberg
the
Real
new
Yield.
slim
It's time now
phone,
for the final spread, the
the
week ahead.
Galaxy
Coming up on Sunday,
S26
we've got a
Edge.
snap election in
According to
Japan,
reliable
and here in the U.S., the
tipster
Super
Ice
Bowl.
Universe,
On Monday, we'll
the
get
super
Fed speak
slim
from Governor
Samsung
Chris Waller
phone
and Atlanta Fed President Raphael Bostic. On Tuesday, earnings from
could have a
Coca-Cola and U.S.
4200
retail sales for December and
milliamp
ADP
an
employment data.
hour
On Wednesday,
battery
the
and
delayed
measure
January
just
jobs report
5.5
comes out,
millimeters
along
thick,
with results
which
from
is
McDonald's
0.3
and
millimeters
inflation
thinner
data out of
than
China.
the
On
S25
Thursday,
Edge
Fed
and
speak from Governor Stephen
0.1
Byron and
millimeters
Dallas Fed
skinnier
President
than
Lori
the
Logan.
iPhone Air.
And on Friday, the U.S. CPI data and
The
Eurozone
Galaxy
GDP come out,
S26
plus
Edge
results
might
from
feature the
Moderna
same
and
6.7-inch screen as
and
before.
for my final thought, we're
While there
looking
have
ahead to
been
the slightly delayed
contradicting
January jobs
rumors
report
about
that was
Samsung
delayed from today
continuing
because
with the
of the
Edge
partial
in
government
future
shutdown. And
lineup.
what we are
I love
anticipating is an
using the
increase of
Galaxy
70,000 jobs
S25 Edge,
for the month of
especially
January, according to
because it
economists
had
polled by
fewer
Bloomberg.
hardware
From New York,
limitations
that does it from us.
than Apple's iPhone Air. How much more Ultra can Samsung get? The Samsung Ultra's phone needs a major ergonomic overhaul, and leaked renders of the new Galaxy S26 Ultra hint at slight design changes. I couldn't use the Galaxy S25 Ultra as my daily driver last year, despite its comparatively lightweight design at 218 grams because of its sharp sides. According to leaked renders, Samsung's Galaxy S26 Ultra could feature curvier corners than its predecessor and a raised vertical camera bump on the back. The device is said to be 0.3 millimeters slimmer at 7.9 millimeters thick and to feature a new M14 OLED display. The company recently released teaser videos of a new privacy feature which could protect you, which could protect your on-screen information from nosy strangers. I'm speculating this tech will be the biggest talking point after launch. The Samsung Galaxy S26 Ultra could sport a larger 1 to 1.1-inch 200 megapixel Sony sensor with an f1.4 aperture for the main camera. The device is set to let in 47% more light for better images in low light situations. I hope the phone gets a telephoto camera upgrade too, but we'll have to wait and watch. All three Samsung Galaxy S26 phones are tipped to be powered by different processors in different regions. In the United States and China, we might get Qualcomm Snapdragon 8 Elite Gen 5 powered devices, while the rest of the world could see Exynos 2600 variants. Historically, Samsung's in-house Exynos chipsets have been notorious for poor heat management, but the new processor could change that issue. According to Korea Economic Daily, the Exynos 2600 could include an NPU that's speculated to be 30% faster than Qualcomm's flagship chipset. New One User Interface 8.5 features. Samsung released its One UI 8 alongside the Galaxy S, Galaxy Z Fold 7, and Z Flip 7 last year, and it is expected to announce One UI 8.5 at the upcoming launch. For context, 8.5 has been available in beta since December, so we know what to expect. Also, I tried Samsung's 2900 trifoldable phone ahead of its United States debut. It won me over in minutes. The stable version of One User Interface 8.5 could bring an expanded dark theme, upgraded home of support, lock screen, widget support, and more AI features, including Samsung's take on Apple's notification summary feature. In the beta version, One UI 8.5 also allows you to resize folders and improves inter-device connectivity. Number 5. Samsung Galaxy Buds 4 Pro. According to a September report from Sam Mobile and an ex-post, Samsung is developing a pair of Galaxy Buds 4 devices. The codename in strings was spotted in a One UI 8.5 leak. Leaked renders from Android Authority suggested the Galaxy Buds 4 and 4 Pro could be a redesign. They appear to have a flat stem and a new wire grill design elements on the side. We don't know about new features and audio improvements yet, but we could get new flagship earbuds alongside the Galaxy S26 lineup in February. Samsung could also showcase its smart AI glasses at the Galaxy Unpacked event. While chances of a launch are lower, we could get a teaser of Samsung's rival to Meta Ray-Bans at the event. The company is partnering with Gentle Monster and Warby Parker to create its new model wearable device. Not too bad. Not too bad. Well, that's all the time that we have for this segment. We're going to go check on all of our churches and charities. We'll be back in the office and we'll pick up right where we left off. So we are at the second portion of the introduction for Rembrandt's Enterprise, and we'll pick it up from there. Thank you all very much for tuning in. Have an amazing day today. May you conquer everything in your path. May everything that you touch turn into solid gold bars and silver bars, and beautiful and precious gemstones such as moissanite or laboratory-grown diamonds or any laboratory-grown gem. Always remember to dream big, because dreams come true. Happened to me, and I know for a fact it's going to happen to you. God bless.